Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the market rundown heading into Wednesday, FOMC day, February 1st. S&P 500, it's really the same story over and over again. Bulls are buying every dip off the middle Bollinger Band daily support in 2017, and today was no different. So we broke the low of yesterday by 9 cents. I take that back. I'm thinking of SPY. So we broke that level by less than $1. Bulls closed at the high of the day, buying the dip in a big way. We saw that rally, and you can almost set your watch to it at this point, where it's like the buying program kicks in the second half of the day, and the Bulls close strong. Past 2 days, that has clearly been the case. So with the reaction to the FOMC tomorrow, we're either going to see a move up towards all-time highs, or we're going to see a loss of this middle Bollinger Band, and we'll be looking down at support to maintain higher lows at 22.57. The weekly time frame is tightening, holding exponential support. Bulls clearly still in control here, looking good, and it's going to be up to the daily time frame in the middle Bollinger Band. At this point, you certainly don't need me to tell you how important this level is after it has been in play for the past month straight. Look how many times we have tested this level. We closed below it once, barely, but other than that, we continue to bounce off of it, and it continues to hold a strong support. IWM, a big-time bullish candlestick, definitely stood out as different than everybody else in the sense that we held the low of yesterday, and we closed a lot more significant higher than where we opened. So it's a bullish reversal candlestick. We're looking to confirm it tomorrow, 135.56 resistance. Then we're looking up at the lower high pattern here. The Bulls are going to have to break 137.55 to break that lower high pattern, but it is saving this weekly chart, which was close to losing exponential support, which has been holding for the past few months, and we are keeping that if we can close here or better. Not the follow through the Bulls were looking for after a bullish week last week, but still remaining in control, still healthy consolidation. And QQQ, Bulls buying the dip as well, looking a lot more like the S&P 500 with a break of the low of yesterday, but a close up at the high of the day. So we've got Apple beat on earnings. The tech sector is strongly weighted in QQQ. So we'll see if that helps the Bulls tomorrow. We're looking at 125.38 and the all-time high 125.92. Support is 123.85 in the middle Bollinger Band, which is 123.10 and ascending. So QQQ is still the strongest, as we have not even touched the middle Bollinger Band in 2017. And actually we did the first day, but other than that we have not. S&P 500 is in the middle, and then IWM bringing up the rear as the weakest, but even the weakest still very strong on the weekly time frame. So keeping that all in mind, FOMC tomorrow going to be a big catalyst for short-term direction as we head into February. And it's all about the middle Bollinger Band on the daily. Make sure and update that level at the open each day so you know what that target is. Thanks for watching. See you tomorrow.